All right, let's jump into it. Just do a bit of the weekend wrap up, and where are we at? 12:38 on the 22nd of November, so Saturday afternoon. Week's obviously sort of finished up. Had a bit of time to chill, get this out of the way, have a look at sort of how the week sort of finished up, see if we can pick out some plans for the coming week. So this past week was actually probably top end of one of the better weeks that I've sort of done. It was a very hectic week. It was very busy. Um, Not necessarily on the data front or anything like that, but certainly there was a lot of trades, a lot of swings in there, really suited my style particularly, which is very much just in out. But I am still holding that gold short from around 4,200 from last Friday, which for me is very long, long time. I'm pretty much an investor at this stage. I think I've used that joke about 5 times, but still, I think it's good. Anyway, look, let's jump into it. Bit of data in that sort of overnight. Nothing really sort of defining stuff. Like the big thing this week really was the fact that we were yet again supposed to. Well, not okay. Let me start that again. We were supposed to get a whole series of bits of data in that, so October numbers for NFP and I think CPI as well. That then got sort of cancelled, but I think there was a bit of a confusion, and this is a very sort of tricky thing at the moment because CPI was supposed to be coming out last week. It was on the docket, it was on the calendar, and then as we sort of got close to the day, it disappeared. And then NFP was touted coming at the start of the week, and then there was word of it not coming out. Then there was confusion about which lot of NFP was not coming out. So it's been very sort of tricky sort of thing as they sort of recalibrate and sort of get back to the general flow of things. But the main sort of takeaway from it was that we got September's NFP numbers. We're not going to get October's NFP numbers because, of course, you've got to correlate and get all the numbers together and then report the following month. So, we're in November now, so we're sort of due for October's numbers as well. But those numbers are then going to be pushed out. I don't know if we're not getting them at all. It seems a bit odd if you get September but not October, and then the next lot that we get are going to be after the rate decision in December. So, as I said, look, if that's confusing, that's pretty much exactly how it is. It is confusing at the moment. But with the data that we did get was NFP, and this was the big one for the week. NFP is what I call second tier bits of data. It's about the same impact and level I put it as CPI. Everything else like GDP, retail numbers, like those kind of things, even the PMIs, they're all sort of like third tier bits of data in that. But the ones that the market will really kind of position itself for and really sort of hold weight onto actually how the number comes out, in correlation to what they're expecting, are the NFP and the CPI. They have the ability to sort of shape the direction of the market for like at least a month or so, or coming through till the actual rate decision, which is the only bit of data that I call tier one bit of data. So NFP coming out, numbers are just here. So we had actually a revision down from going back, geez, when it was like August or something, I suppose, if these are September's numbers. So 22,000. So the job situation or position was quite weak coming into the shutdown and that. And we saw the dollar heavily under pressure because of all of this. And because the question is, if the jobs market's so weak, they're going to have to cut rates to avoid recession. Cutting rates, bad for the dollar, or bad for any currency of whatever central bank that they're talking about. But if they're going to cut rates, weak for the dollar, dollar's been trading, at the time, very heavy. And so that's the last time we saw it. 22. Revised down to -4. That is like shocking. Anyway, that's stale news basically now. Like, we're talking a couple of months here. Expectation was, look, a little bit of a pickup anyway, 53, and it came in at 119, which is obviously double and a bit what the expectation was. So dollar positive for this bit of data because why? Because if the jobs market isn't the focus, so they've got the dual mandate. I say this stuff repeatedly, but this is what it ingrains it into. You've got the dual mandate. You've got jobs market, employment on one side. You've got inflation on the other side. The way that the central bank deals with these issues are completely opposite. So when the jobs market's going bad, they're talking about, okay, we've got to cut. So the fact that the jobs market came in a little bit stronger means, okay, we don't necessarily need to cut. There's not as large an argument for them to cut based off just the jobs. If the jobs is the only thing we're looking at, well, you know what, it's moving in the right direction. Let's see how that goes. Let's not cut, which then could exacerbate the other mandate, which is inflation, and that could then sort of, get even worse. So you've got to balance the two. Well, the Fed, they have to balance the two. Our job is to sort of try and pick out what they're going to do and how they're going to act. And that's how, I mean, obviously there's a lot of moving parts as to sort of how these currencies will sort of strengthen and that. But one of the big sort of strengths about a currency are the rates from the central bank. And particularly with the Fed and the US dollar, DXY, you see large positioning sorry, let me say that again, a very large position prior to the actual decision. So I've covered this a couple of times, and maybe I'll show it on the chart if I can be bothered sort of scanning back through it. But so, you know what? I'll do it just just to emphasize the point. But I've got on this larger one. I think this one here. I know this is sort of riveting stuff here, but just emphasizes the point. This position through here. So I've got it marked out. They're going to cut. They're going to cut. Look at how much it got impacted. This is going back 2024, so last year. All this is pre-positioning with the idea that they're going to cut rates. Look what happened when they actually cut rates. Nothing. Like a blip for a second, and then stuffed around for a couple of days, and then massive reversal there afterwards. If you have a look at this, I think on the weekly, maybe I've got it marked here. So this is what we saw this year. This is the 25 base point cut. Look at how much it got hammered down, probably more around this period here, but obviously tried to break out, push back down. You know, and I mean, like there's a number of factors here. Like, this is also the tariff stuff and, changing of the administration, all this kind of stuff as well. But the point is that sort of like, here's the cut, this little section just here. Move this out of the way. Here's the cut, and what happens with the market? Moves up to the top side. So anyway, I'm just sort of emphasizing the point that sort of like, a lot of the positioning is done prior to the actual cut. And so this is why when we sort of get these bits of data, they can be quite impactful, because the market's not going to wait till the rate decision to make their position. They're going to use these bits of data prior to the rate decision to then position themselves accordingly. And then when that cut happens, they sell into that strength. It's the old buy the rumor, sell the news kind of thing. Exactly that, actually. So NFPs, as I said, second tier bit of data. It's come in a lot stronger. Well, I mean, a lot stronger than it had. They were expecting. So their position. Think about it. They're positioning, and you got to take it at face value that the market's positioning themselves for this number here. When it comes in higher, in this case double and a bit, well, what is going to happen? Well, typically with this, you would expect US dollar strength. And we got it for a brief second, but then obviously sold into. I'll cover this when I get to the chart, because I think it's a very interesting and important sort of distinction with the fact that it got sold into, not it sold off. Both of them result in an immediate little push down, but I think the takeaway and what we can use to sort of hopefully sort of predict how it's going to be moving forward over the next couple of months, or at least into the end of the year. I think that's an important distinction, but I'll show that with the chart. Anyway, look, long story short, after all that rambling, we got the NFP was strong. Unemployment claims, as I said, 220, two teens, like 200 in the teens, 200 in the 20s, is not too bad. Again, that's a bit of US dollar strength. For this kind of here. Counter to this, we got unemployment rate ticked up a little bit, so that's obviously negative for the dollar. And I don't really cover the earnings, hourly earnings and that, but obviously slowing down. Again, it doesn't hold the same weight as these, but it is one of those sort of things. Obviously, people aren't making money. Well, if they're not making money, they can't spend money. Okay, that can impact your retail sales, can then impact your GDP. So on and so on. So you want to make sure that people have got the money, that they're keeping up with all these sort of things. While inflation, cost of living, yada yada, all this kind of garbage is going up, people are still making enough money to actually go out and spend to help the companies keep ticking over. Otherwise, the earnings of these companies go down. If the earnings go down, they can't employ people, and then the unemployment rate can tick up, and then you're not advertising as much. Remember JOLTS? We haven't even had the JOLTS numbers. That's the job opening numbers. So all these things, they all feed into each other, and this is the fun part of this. If you enjoy this kind of sort of stuff, you're like, well, if this happens, that means this happens. So it's just, and it's kind of like if you can picture a whole bunch of cogs. If I turn this one this way, it turns that one this way, blah, 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 and so on. You can't see me because I'm doing it in the air with my hands, but you get the idea, you get the gist. So after all of that, we had overall kind of positive data. I would say that this holds more weight than the unemployment rate, but as I said, it didn't break out, didn't sort of go higher. It sold off exactly kind of where it needed to. But that was the big one of the week in that. So dollar very much still on the bid because of that as well. Coming through the rest of it, again, look, you got PMIs. Okay, these are the bits of data. These ones are just from the managers. These are the ones with 50 as the baseline. Further away from 50 is expansion. Below 50 is sort of contraction. We have a look at sort of services. We look at manufacturing, both above 50, both kind of sort of positive. Actually beat a little bit by expectations there on the services, and the manufacturing pretty much more or less in line with what expected there. Excuse me, but as far as I can see, I'm just having a quick look on another thing here. Did we get any actual movement off that? We may have got a little bit of a sell-off through that period, though not enough to sort of say that that is that bit of data. Let me have a look, 11:30. 145. No, it's pretty small impact on that kind of thing. Not really anything massive. All right, so anyway, look, that was pretty much the data there. What do we have sort of coming up this week? All right, starting off from there, we've got typical sort of Mondays, just quiet. Another bank holiday over in Japan. Like, these guys, obviously, they work hard, but they have a lot of bank holidays. Oh, Thanksgiving. Labor Thanksgiving. Okay, interesting. So Monday's pretty quiet on the docket. Tuesday looks similar. Tuesday night, technically Wednesday morning, local Melbourne time. That we got PPI. So PPI is obviously producer price index. So with this, think about it like the wholesalers. The CPI, which is the consumer price index, and this is the PPI. So this is inflation for the wholesalers. Think about it. It's an easy way to think about it. So if the guys that are sort of buying this stuff are they're seeing that there's an inflation tick up there, well, in theory, they're going to pass those costs down. So they're spending an extra, they were spending $5, now they're spending $6, and they were selling it for 10. Well, now they'll sell it for 11. Or so on, just as an idea. And then obviously as they sell it for 11, well, that could then sort of push up CPI. Then if CPI goes up and that's the inflation, how does the central bank deal with that? Well, that's more an idea for them to hold. So yeah, I mean, it's sort of like you got to follow it through just to sort of that end result of which camp would we put this in. Again, retail sales, PPI, you're not going to go, oh my God, here we go, and the market's just absolutely, done a complete 180 and dropped, and we got a new trend for the month. It won't happen off PPI. You may get a knee-jerk reaction, but this is why these ones are third-tier bits of data. You plug them in, but they don't hold the same weight. Not all bits of data are equal, of course. So anyway, we haven't actually got any sort of expectations here. So again, this is all a bit sort of tricky stuff because this is the stuff that still we're just coming back to at the moment. Retail sales, look, we've got previous, but when does previous actually mean? Previous means September. So again, we just don't have October data. So we don't know, we don't know there's no expectation at this point. So we don't know what the market's potentially positioning for. All we're doing is going off what it was 2 months ago, and it looked like it was slightly positive. Okay, well, that's great. But as that, in financial markets and that, a day can mean data and news is stale, let alone 2 months. So you kind of take these things a little bit with a sort of grain of salt. So anyway, look, it's something that could get a bit of a sort of action sort of with the market, depending on how these things come out and whether we have a forecast prior to that. Moving forward, we've got manufacturing, home sales, blah, 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 boring. Okay, Wednesday, finally we got something. CPI in Australia, so 3.5%. I'm not surprised. I'm so not surprised. I'm so surprised that we don't have any sort of expectations for these kind of things. So obviously, inflation has been a little bit of an issue Well, it is an actually increasing issue, as you can see through the historical stuff here. July, we're at 1.9. August jumped massively to 2.8, 3.5%. This is going in the wrong direction. So CPI, their target is 2%. The sort of like general sort of, accepted, well, not accepted, but like the sort of target that they go for as an acceptable level of inflation. Because you don't want no inflation, because you do want things to sort of move up a little bit, but at an acceptable rate. And so 3.5% is way too high. We pretty much sort of heard Bullock sort of saying in that, well, the last couple of times, and it's pretty much a general consensus that the cuts for the Aussie from the RBA are going to be put on hold. And the reason being with this is that you can't cut into increasing inflation. If inflation is above band or above target, but at least stabilizing, then there's an argument for it. Are they going to cut? Are they going to hold? But the thing is, this is accelerating. That's 1, 2, 3, 4 months in a row that this has jumped up. It's nearly doubled, actually, in 4 months. So this is going to be a little bit interesting to see. The main thing you want to see with this is this trend continuing? Are we going to see inflation continue to move up? Or is it going to stabilize? I don't really have anything to sort of say about it in terms of what I'm sort of predicting, and I'll wait to sort of see what the expectations are and that with it all. I would say maybe at some point it would stabilize. Maybe we get another 3.5%. I don't know. It could come in 4%. It could come in, like I didn't see this thing coming here 1.9 to 2.8. Like I just don't have any means to be able to sort of like judge this kind of stuff or make a sort of decision on this sort of stuff. But that's not our job. Our job isn't to sort of predict it. Our job is to react as traders, is to react to what the expectation is, how the market sort of is positioned, and then when the data comes out, how they will react. That's how you make money as a trader. You're not there. You're not a statistician or whatever, and that sort of correlating this data yourself. But the point is, we sort of see what the expectation is, and then we trade off that accordingly. That's the way that you sort of handle these sort of things. So basically what we're sort of looking at is if this comes in, okay, play out the scenario. Say it comes in at 4%, okay? If it comes in at 4%, well, that's inflation is obviously continuing to accelerate, or 3.6, 3.7, 3.8, whatever. If we see that it's still starting if it's continuing to move in that direction, to accelerate, the central bank definitely, RBA will definitely not be cutting. Obviously, I mean, like even at 3.5%, they're not going to be cutting. But they're not quite at the point. I don't think you're quite at the point of saying, hey, we need to hike. But if this thing keeps moving up, the way that they deal with rising inflation is to hike. And I'm not talking about like inflation that's up. So this is up at the moment, but say this goes over the next couple of prints, 3.7, 3.9, 4.2. It's obviously still going up. Inflation's becoming a persistent problem. Well, the central bank need to stop that. Because if you are holding rates and you're holding rates and you're holding rates and it's still going up, it's not having the desired effect. So how do they sort of control that? What's as they say, the lever that they can pull? Well, the lever they can pull is to hike rates. And this is the position that we're in with Australia at the moment, with the RBA, that this is moving up in this direction. Cuts are off the table. Most likely they're going to hold and sort of see what happens. But if this continues to move up higher, then hikes are very much on the cards for 2026. Like you got to be aware of this, that they could be hiking in 2026 if inflation continues to move up. Now, if the other scenario is that it stabilizes, so it comes in again, say 3.5, 3.4, 3.6, like pretty much flat. Then again, they're still going to hold. I think it's pretty much guaranteed they're going to hold. They're going to wait and see. Like the RBA love, we're going to wait and see and let the data dictate. That is like, the stock standard on the cards of what they have to say or what they do say each time. Even from when Low was in there, but Bullock she still does the same. Bullock's a bit better than Low, I reckon. But pretty much it's the standards. That's the RBA stance. Very slow to cut, very slow to hike rates as well. They don't like to sort of jump the gun, which is, I guess, maybe a little bit safe, but they're always a little bit behind the curve with their approach with that gun. They don't preempt. They wait till it breaks and then they act. So anyway, point is, if it comes in at 3.5%, well, okay, not too bad. It's not moving up. It's not coming down. Let's just give it another month, see how it goes. That'll be the approach. And then obviously if it comes down, well, it's still way above target. So they're not going to cut rates while it's still way above target. So they're going to hold. So if you can see, pretty much all outcomes lead to the idea that the RBA is going to hold as this inflation is still a bit of an issue. Once this gets back down lower, well, then you can deal with the idea of cutting rates. But at the same time, same with the Fed, you got to balance this with the jobs market. And the jobs market had a spike up. Remember, it went to 4.5% unemployment, but we just had jobs numbers out. Was that just this week or was it last week? I can't remember. Regardless of it all, unemployment came back down 4.3%, which they're happy with. And job expectations were there spammed 20,000, came in at 50,000. So the job market's not looking too bad. So the job market doesn't need a helping hand. The helping hand with the job market is to cut rates. So the on the job side of things, they're at a hold. CPI, inflation, they've pretty much only got the opportunity to, they've only got the sort of only thing to hold there as well. So I would say that's pretty much in the bag for a hold for RBA for the foreseeable future. After this, we got what's happening over in New Zealand. So these guys are very different to us in that because they spiked up. If you have a look at their, look at how quickly they went boom up here. Plus they went up to 5%, and now they've been aggressively cutting down, and they're continuing to cut. So New Zealand dollar continues to sort of weaken. I don't trade the Aussie New Zealand, but it is a good sort of thing just to have a look over every now and then, just to sort of like, because that sort of will sort of dictate to sort of show you sort of how the two currencies are kind of working together and that's breaking out of a multi-year trend range. Sorry, if you have a look at this, boom, and this is what I'm talking about. If you look at this, we're talking going back to, it seems to have cooled off a little bit here, but we're talking going back to levels from 2013. It's been in this band. But this is the power of the cutting and the cutting cycles. Because New Zealand's been cutting aggressively, and what's been happening? Their currency has been depreciating, like against the Aussie at least, probably against a lot of things actually, but against the Aussie. And because Aussie's in a hold mentality, and RBNZ is still cutting, what's happened? The price has shot right out of the top to 12-year highs. So it's important to sort of understand this sort of fundamental sort of side of stuff as well. Anyway, look, I'm 20 minutes in and I've only really sort of ticked through a bit of news and that. Keep on sort of pushing on here. So that's Wednesday done. We got Thursday night. We got unemployment claims. Remember, this is the weekly one. This is one I was talking about before, 220. So anything in the sort of teens and the 20s will be considered sort of bullish or strong positive for the dollar. Anything 30s or 40s, most like 30s a bit. 40s will definitely be sort of probably a little bit of an issue, and we'll sell that off. And I've obviously covered jobs enough in this video anyway. We got GDP. We have absolutely no numbers of this whatsoever. It's apparently still tentative. Okay, that's fine. We got PCE. So PCE is, again, we got no numbers here. PCE is supposedly it's pretty much just, it's kind of almost kind of like CPI in that, but it's the Fed's preferred measure of inflation, apparently. But yeah, we haven't got any data, so I can't really sort of talk on that. Rest of the week looks pretty quiet. Actually, very, 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 very quiet. So main sort of things there. Sort of around sort of Wednesday, we got CPI in Australia. We got a bit of PPI. We got unemployment claims for the weekly, and then PCE if it does come out as well. So pretty quiet on the docket for the week. All right, let's jump onto the charts. I'll start off with the dollar actually. So dollar pumping. Absolutely coming back to life, and this is on the weekly, obviously bigger, sort of higher time frame than I sort of normally trade on. I'll go back to that original chart that I put up just before. Which one's this one here? Yeah, with the notation. So I did this chart actually a while back. This is a weekly, and I only use this to emphasize a few points in that. Obviously, the sort of the strength of the pre-positioning to these cuts and yada yada. But another interesting takeaway for this, and this is the thing that I sort of did this chart when I was down the bottom here, was that you've got with these ranges, you've got things that are called counter swings. So you can see here every time it's bought up, sold down, bought up, overshoot, overshoot, bought up, overshoot, overshoot. Now big overshoot, and particularly with this one, this was the argument that I had sort of at the time, because in theory, here's your little range going. This did everything it should have from a technical standpoint to potentially be going back up over here. It broke out of the range, it back tested, the back test held, made a higher high. I mean, that's it. Breakout, back test, higher high, bang, trend, break, boom. And what happened? Boom, got smashed down to the bottom. But if we have a look down here, this has done everything it should have done to sort of break down here lower as well. Back tested the range, lower low to confirm. Break, back test, lower low. So in theory, this should have come down here based on technicals, but it didn't. Move back over here. Why? Because this is pretty much a range. And this is my argument to be sort of buying the US dollar and positioning myself for US dollar strength down here, was that this is just going to be a counter swing, which is going to bring us back up into the range to our potential price targets, which are at 104 and 106. These areas are definitely going to get reactions. We've seen it previously. Just look at the historical sort of movements of the market. Here, 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 for example. So what's going to happen when it comes here? Most likely you're going to get a sell down. Doesn't mean it's going to break down and come down all the way over here, but you're going to get a reaction. And that's the point. Again, this is trading. We're not investing. We're just trying to capture the biggest part of the moves that we can. So that's the broad picture with DXY. If we get onto a smaller sort of chart that we can actually sort of work and trade off, we're starting to really kind of confirm this channel. I did a video, I think, on Wednesday where I updated this channel, because previously we had it coming off the lows down here, and then this would have made this a potential fake breakdown. But I've changed this and allowed for this extra part because I thought this seems like a more realistic channel. We hadn't closed the gap at this stage either. So this was actually a very good sort of trade, and this is potentially why I've done quite well. Well, not potentially, but it is along the lines of why I've done quite well over the last couple of weeks, is because of this whole move, break up through here, pull back through here, and move up over here. Because look, a lot of people trade different things in that. I use the US dollar, the DXY, sort of religiously with my analysis. As obviously, I cover it in every video and probably cover it first every time, because I do believe it's the biggest driver, and it gives us it gives me a good sort of barometer for how I think the market's relating to the US dollar broadly, and then by extension to risk and so on, gold, Aussie, all these kind of things, even though Aussie's not part of it. Anyway, point is that, so through this period here, we had this gap that stayed open. I do say with these gaps and that, it either closes straight away, like, because we get a lot of gaps, you can see, most sessions you'll get a bit of a gap. Most sessions they'll close it straight away, or, within the first half hour or so. There was a period through here, we gapped up every morning. Gapped up, gapped up, gapped up. We closed the gap and then sell down. Close gap, sell down, yada, yada, whatever. Moving all the way through here. This gave us a good sort of defining line to break out off. And, I covered this, I think, said 99.7. That was the ticket. That was the one that sort of, should we take out 99.7? Bang, we're moving up. We're going to, and the target is to close the gap. So if the gap doesn't close in the morning, there's a chance that you'll get it and close in Euro session. If it doesn't close, obviously in the morning, but it doesn't also close in the Euro session, then it can stay open for like 2 weeks or so, generally. That's how I pretty much gauge it. And this gap stayed open for 2 weeks exactly, and we closed it on Thursday. What was it, Thursday night or something? Yeah, Wednesday night, Thursday morning, whatever. We closed that gap. So dollar back on the bid. I put a video out on Wednesday. If you have a look, I said, look, where's the structure? Here's the structure. We got sort of up to resistance. We got back. We got support. This leg had to come. This is, again, to me, I was like, look, the gap's open. Structurally, even if it's going to come down over here, if you watch the video, I did exactly this. I said, look, if it's going to fail, that's how it's going to fail. Obviously, it didn't do that. but it's important to know where in the structure you are. So at the moment, as it stands, we're in this level like this. Potential double top, obviously not lower high, but this thing's, and this is where we're trying to sort of work out with the analysis what's going to happen next. Is this it for the leg? So from here, are we going to get this, which then puts the emphasis back down on these lows? Maybe probably not this this channel, because if we fail to continue the channel, that's an early indicator that the channel's going to break. So I wouldn't put emphasis back on the bounce of the channel. It could get a reaction, it would get a reaction, but the failure to continue the structure up the top over here means that you negate pretty much the whole structure, which means you've got more of an idea that it's going to come down and test those horizontals. So if we fail from this area here, and we don't sort of get a little sort of, cup and handle kind of thing, so coming back here, so I would say back below 99.7, then you're looking back to 99 pretty quickly. I reckon that'd be your trade to the bottom side there, because you failed to continue the structure. We're resorting to what here would be the swing lows, and then you've either got a range or you've got lower high coming in. Again, you just got to know what part of the structure you're in. So we're at this sort of pivotal kind of point at the moment where we're in potential for double top, potential for range, also in the potential for a breakout. And this is the point that I'm sort of getting at the moment. So that's on the higher sort of time frame, higher sort of structure. This is the sort of lower kind of structure here. And we kind of have a bit of a flag setting up here. I'll give it a little bit more leeway because it danced around it a little bit. But the point is still the same. We're consolidating. We're going sideways at resistance. So consolidation favors continuation. So the idea that we moved into this consolidation in a bullish manner means there's a higher probability that we're going to see a bullish move to come out of the consolidation. Now, nothing's ever 100%, of course, so this thing could roll over. But this brings me back to one of the original points I made, that when that data came out, the NFP, which is this part just here, you can see that it popped up, hit that resistance right to the exact highs, and then sold back down. And this is the important sort of distinction that I think needs to be made with this, is that it got sold into, but it didn't sell off. You can see it's sort of negative, bearish, but it didn't go all the way back down over here. Why? Because you know what? There's a couple of factors. One, it was actually positive data. It was a bit of a mix because, okay, unemployment was up, but it was NFP, even though it's 2 months old, it was dollar positive data. If you take it at face value and it has to be either bullish or bearish, well, it's bullish for the dollar, that data, because it was strong. It was a big beat. I covered this, obviously, at the start of this video. But the point is that it's sold down. That's fine. From a technical point, people have been trading this. People are going to take profit. You know, the old saying that nothing goes in a straight line. Well, you know, people take profit. Blah, blah, blah. What did the buyers do? The buyers didn't wait for it to come back down here. They said, that's fine. I'll take it up. I'll take it up. And they did it time and time again through here. And the point is that it's consolidating. So eventually, what you want to do with this sort of stuff, and this is the same with it all, you've got sellers here, sellers here, sellers here, sellers here. These people are taking profit. You've also got buyers. I'll take that. You want to sell off? I'll take that. I'll take that. I'll take that. So you've got a balance between the buyers pushing up, you've got the sellers taking profit. The fact that it's in this consolidation means that, you know, it favors the continuation. So if the buyers keep taking this up, eventually the people that want to take profit at this level here will be depleted. And when they're depleted, that's what you'll see. It'll move up and it'll search for the next lot of buyers. Next lot of sellers. Where are we going to go? And this is when you apply measured moves, technical analysis with the channel highs, these kind of things. So what we will kind of want to see here is sort of like, you know, obviously the buyers continue to push and push and push, supported by the idea that, you know, the Fed are going to hold rates. Because if you're holding rates, well, that's bullish for the dollar. So if we hear the Fed speakers coming out, because they keep rabbiting on all the time, if we hear the Fed speakers coming out and they're still, they're going, hey, look, you know what, we're happy with the position at the moment, we don't see the need to cut, then that's going to remain bullish for the dollar, and potentially we get that breakout. moving up over here. This is still the plan, this kind of thing like this, up into the price target, 2 attempts and then a fail. That's my kind of outlook for it, because nothing's going to go up forever. I'm just going to see next level. And you go to these next levels. Where's horizontal across here, daily resistance. You also got the channel high. So there's a couple of technical reasons for people to take profit. And then we have a cool off and so on and so on. And that's the whole point where you get the money flow from market to market. So what we want to see is obviously that pushing up to sort of continue this way here. If we see them keep selling it down and it does break through below, say, this 100 level, then you look down to where could you potentially get? Okay, well, this was a big breakout level, so this is where you'd want to see the buyers give it another shot. And this is why I said originally with this below 99.7, this little alert here, that's going to be a fail line. So you've got a couple of levels here. So you want to see buyers hold this line here. If they do fail there, you want to see them hold this line here. If they fail here, well, that's it. Dollar's done. Bang. And as I said, you're probably coming back down to at least 99. And then you want to see what are the buyers doing down here. It's the same sort of thing. You don't have to reinvent the wheel. You just have to look at sort of what's the chart actually telling you. And it's a fun thing when you do the technical analysis, because it does it. As you can tell, it tells a story. And that's what you want to sort of be able to sort of dictate, and you've got to be able to act accordingly for this as well. So look, that gives the possibility that, okay, yeah, it could come down here. It also gives the way forward to sort of move up here. So the fact that we're consolidating underneath resistance favors the idea of a breakout. Obviously, we just need to close up above 140, 100.40, and then on you go, and you're looking up to 101, and then we can move on from there. But at the moment, it's very much looking dollar bullish. And I'm still positioned for dollar strength through to the end of the year. Okay, all of that said, having a look at where we got gold here. So gold, geez, you like scrappy charts. This is a big one here. So I was talking to a mate on Friday, and I sort of did this. I said, apart from the fact, excuse the scrappy chart, you had to make a decision. What leg are we in? Are we in the leg of moving up high, as in here's here, so this is leg 1, leg 2, and then leg 3, equal to this on here. So the same thing that I talk about always. Move up, find resistance, move back, find support, move up here. Is that what we were looking at? Or were we in this leg here, where you're coming down here, you found support, you found resistance, you're coming down to test here, to then go down lower there. So it really was very much a 50-50 chance with gold on the Friday. I did remain with my sort of short bias, because that's what I've been sort of touting, because I'm saying that I think there's going to be US dollar strength to the end of the year. These things don't have to run inverse, but 90% of the time they do. 10% of the time they can kind of run together, but generally they will revert back to the norm, which is inverse to each other. And why I sort of said, sometimes you see that the dollar and gold will both be moving up. I always say one's lying. And that's where opportunity lies, because you know that it's going to revert back to its normal relationship, which is inverse. It's just a matter of when, and it's a matter of which one. Does the dollar keep going up and gold come off, or is the dollar lying and gold keeps going up and the dollar comes off? So you got to make that sort of decision for yourself with it all. But what we did see was come back down and test this 40-30 line. So that worked quite well. We got a bit of a bounce back up over here into sort of end of the close, but more or less flat through that level there. So let me just clean some of this up just to make the chart look a little bit more legible. Okay, whatever, it's still a little bit scrappy, but whatever. Anyway, point is, okay, so it's kind of flat into the end of the year. It hasn't really given us anything majorly to work off, because if you step back a bit, it's in this big triangle like this. And this is what gave level to the argument this thing could have broken higher. Because it had it broken higher on Friday, well, you're coming up over here, as I said, that's your structure, resistance, support, come up to see, are we going to get that next level? You then take into account this falling resistance. That would be probably the level there. It would start to fill out the structure, which in theory would be bullish because this big triangle would be a consolidation. And then you go back one step and you go, which direction did it come into the consolidation? Well, it came in bullish, consolidation. Consolidation favors continuation. Bullish, bullish breakout. That's the argument for gold potentially going higher. When I weighed and I put sort of the dollar into the equation, I think the dollar's going to run. I think that's going to sort of push gold down, and that's pretty much how I'm sort of trading it. I'm happy to take intraday trades long, but my general thing is okay. Well, because I think it's going down lower, I'm happy to sort of short it a little bit heavier than I am to buy it long. Anyway, look, came down, tested this level. This was the breakout level that we saw, 40.30. This is the big one from Monday, 2 weeks ago. And we saw that big breakout up through here, big pull back down here, boom, 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 boom. In theory, it's still inside this triangle structure. This is why I've got this arrow here, and I do have this arrow up over here, even though I don't think it's going to go up. That is the level in which it's going to be moving a little bit higher, obviously above 42.40, bang, you're off to the races. I do think it's going to come down lower. I think this is just sort of like end of week kind of flows with it all. We hit some targets. We saw that sort of last sort of pushback of US dollar where it attempted to break out but didn't. But while it's consolidating, gold's consolidating. If we see the dollar break out, we'll see gold come down. Where to from now? This was the area that I was looking at. I thought it'd probably a little bit sort of, I suppose, yeah, it's close enough and that you can sort of drag this up a little bit, this one here. See if you get that technically right, but more or less came in, touched that line, support, 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 support. It's tested it. Okay, people took profit, buy stepped in, here's your bounce. You come back through here again, that's your second effort. And this is another thing I always talk about. It's always about the second effort, like when you're playing footy. The first effort's one, great, but the second effort is what really counts. So if we come back below, call it 40-20, but 40-30, 40-20, if we come back below here, and then obviously below 4,000, that to me is opening the door, and we're going to be coming down deeper. Probably almost even get rid of this for now. And I'd probably be looking at low 39s. Underneath 4,000, I'd be looking for sort of 39.30 down to test this support through here. And why? Because that's where the buyers have been. The buyers have been. What's going to happen when it first comes back there after a period? Well, the buyers are going to step in there again. They're going to give it a shot. Very rarely do these things ever break out or break through a level, whether you're going up or going down. Very rarely do they ever break through it on the first attempt back to it, unless it's some big news catalyst, landscape changing kind of stuff. So short side here, if you get underneath 4,000, you target that sort of 39.30s kind of area and you take some profit. If you want to buy it, there's probably a good chance you probably get a pretty decent bounce off that as well. But I think that's certainly an area where we're going to get a reaction, and that's going to be opened up by a move down underneath 4,000. It'll be an early warning sign if we get down underneath 40.20, but like we've got the buyers here, you want to see lack of buying opportunities, or sorry, not opportunities, but lack of buying sort of involvement, strength, buyers at this level here as well. If they're not there, you might get a little bit of reaction through here as well. But if they're not there, that's most likely where the market's going to test for them. So that's going to be a good trade down through there. If we get through 4,000, I think sort of, step on. I'm going to step on it a little bit and go through. I've actually sort of, as I said, I've got my investor short position from just under 4,200. So, just short from up over here, which is, a little bit shitty to give back so much through this bounce here. But, it wasn't like I couldn't trade. I was still doing my normal trade. This is just a core position. So anyway, for me, it's new. I'm getting there. All right, so under 4,000, we did that. Look, back up above, say, 41.30, then, okay, you could still see this potentially as being valid because, look, buyers did step in. Little bit of a falling resistance here. It's kind of washed there. The last couple of hours, I don't really sort of think about it too much. So, look, above 41.20, you're probably moving up towards 41.80. Below 4,000, moving down to 39.30. I think that's the trade for gold. Silver. Now, silver's another one. I should exited this very well in the 60s and the 70s. So it hit 61 48.61. I'm leaving the dollar off here. I'm just talking about the cents and that. But I think I close this one sec. No, this is a short position I was trying to get into with gold. This is just robbery. It gets like a scratch below it and then it drops like $30. I was like, damn it. Anyway, point is, this was the silver trade through here. As you can see, 50 cents in that, and that's not too bad. I'm happy to take that. But they were my closes, 48.72 and 48.66. So where are we at here? I know this is a little bit tooting their own horn, but sometimes you get there. Was it 66? So there's one close. What's that? Or whatever. And what was the other one? 72. So 72. Bang. There and there. That was where I took profit on my short. So, that was, sometimes you do these things. Oh, wait, no, that's not it. 62, whatever. 62, 72, whatever. It's like this and this or something like that. There you go. Something like that. 66, 72, just for accuracy. That was, about as good as you're going to get. Like, as I said, maybe I'm just tooting my own horn, but like sometimes you absolutely nail these. Another one with the Aussie. If you look at sort of my levels that I put out, my price target was 64.21. Hit 64.21 and just boom, bounced right off that. So it was. And again, this is why this week I've had a pretty good week because I've just been reading and calling the levels, trading them. As I said, sorry, I'm getting a bit distracted here. This is supposed to be about analysis, not my trades, but still to the point. Analysis is part of it. Execution is the second part of it. That's where you got to put your money where your mouth is. There's no point saying, hey, gold's going to 5,000. Did you put any money on it? Or no? Well, okay, who gives a shit? So you got to do the analysis. You got to do the execution. You actually got to get involved with the market, and then you got to manage it. And you got to be able to manage these things. And as I said, typically I'm in and out, and I miss the big runs. But this time, that gold one, I'm still holding from around 42. So that's working quite well. Anyway, enough of that. It's a tough read, to be honest. Again, with gold, I was like, look, this is coming down over here. To me, I was saying that the daily level I wanted to see it close below was 50. And where did we close? 49.98. So that's crazy. Big bounce up here, as you can see, right down the bottom of the wick there. So look, to me, it is a little bit continuing down here because again, if you look at these things, look at the structure. You're moving down, you find support. You move up, you find resistance. This is the third leg. This is the one that I'm always talking about. The third leg is the one that will define it. This you're either going to get lower low, which, then what it gives to give you? It gives you continuation, like this. That's what lower low, well, a close down here would have sort of given us a better confirmation of. But the market bought it right up. Technically, it's underneath this little zone here, but it's not as clear cut. Had it closed down 49.30, well, bang, that's confirmation, closed underneath. You look for retests and to get on board and yada yada. But we got a big bounce up here. So it means that sort of, what does it mean? It means that sort of, buyers are sort of stepping in here. Then yes, it's the end of the week. Let's put it on the 4 hour. End of the week, but they did take it back up. You know what I mean? Like maybe this is just people taking profit. I mean, obviously this is what I did. I don't move the market, but I'm kind of a participant in it. There are other people taking profit in these markets as well. So this could be, and this is the point that we got to decide now: is this just profit taking, and we continue back down over here, or is this, say, a little bit of a fake breakout down here, and it's coming back up over here? Again, you got to put the analysis together and sort of say to yourself, what's outside just silver? What else could be dictating? And obviously the dollar is a big part of these sort of things as well. And if we have dollar strength, I think metals as a whole are going to get whacked. And I think downside is more to come. And I think there's a lot more risk for a move down here to mid 40s potentially. I told you that the 43.50 there, but maybe it was on the other chart. 49. Where is it here? 39.50, that big double top, 1, 2, that's your measured move. Should it come down here, that's where the target is. If you get a close underneath 46, potentially where you're headed with it. Anyway, that's the bigger picture with it all. So the question is, okay, does this come back up over here? If it does, okay, maybe we look to sell into it off 41.50, 41.40, these kind of areas over here, because we know that this area was the support back here with that head and shoulders before the breakdown. It was the actual breakdown level or thereabouts in that. And we've seen it chopped through here a little bit, but as you can see, they tried to hold it with a back test, failed, and then once it went through, sold down off this level here. So most likely, should this thing run a little bit higher, this is where I'm going to be shorting it from, because I do believe we're going to be coming down lower. And I'm open to the idea that, that it could sort of come up here, drag in a few more longs, and then they sort of sell it down here again. The silver crowd is very kind of crazy. Like I've got a mate that sort of trades and he puts up these posts and he gets like 100 responses of people. Oh, you can't do this. How never going to do this. They're crazy. But the point is, use it as like a temperature check on how people want to trade these things, and they don't believe that this thing can ever come down. I mean, they've had years and years and years of this thing. They call it Mr. Slammy, or something. I only just learned that recently. Mr. Slammy. Is the fact that the silver market just gets hammered all the time. So now that it's actually up, they're like, here we go, boom, we got to go. But again, look, our job's not to sort of say what I'm not valuing silver. I don't know where the hell to value silver. All I'm doing is reacting to how the market values silver and taking my little chunk of the pie and that sort of as it moves up and down. But the point is that obviously we've got a bit of a bounce here. So you need to honour the idea that it did bounce. Look, it came into the end of the week, sold down for the last hour or last couple of hours. Okay, it's oversold, turning up. There's an argument to say this thing could move up higher. Should it move up into this level here, then I'll look to short it. Should it come back down over here, we're targeting these lows, I'll look to short it as well. I'm not looking to buy this at this stage. Maybe above, even up over here. Maybe above 42. Maybe then I'd sort of think about it. But for now, I think it's just a sell, regardless of which way it moves. Cool. Tick along. We've got Aussie. Aussie, as I said, this was the move down here. This is something we've been building for a while. If you have a look at way back over here, I mean, for a long time I've been touting 64.20, but this is a level, this is the line in the sand. The video I put on Wednesday, in the title or in the sort of description I wrote up, LIS, line in the sand for Aussie. And what did it do? Clipped it to the point, 64.21. Like, as I said, this is why this week I've done quite well, because I've been reading these things and backing myself. I've had those three parts, the analysis, execution, and the management has been very spot on. Even through this point coming down here, we sort of had this horizontal here. This is what I was saying. Like, if you go back, watch the videos, this is the thing. We broke through this level here, came back up, closed underneath, bang. Where do we look for it? We look for where the buyers are here. Buyers, 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 buyers. Buyers held it again. Once it broke down, see, this wasn't a clear-cut break. See how it had a bit of a wick on it? Still closed bearish, but had a bit of a wick. What happened when the market opened? It kept moving up. It wasn't a clear-cut push down. Even this one sort of here pushed up a retest. But this is what I said. This provided the back test. So have a look at this level here. This is your back test, and then smash, got hammered down. It's been trading very heavy. And even at this end here, we could put in a new little zone through here. This little zone here. You can see that the market is trying to sort of push back up here. But because it's trading so heavy, they're just holding it at this level. Tried to come back up, bang, back down, hit target, came down, hit target, push back up here. So should we see the dollar sell off, then we could see this potentially drift up here a little bit. We've got CPI coming out this week. If that comes in hot, and this is why the fundamentals and the technicals work together, but if that comes in hot, well, that's positive for the Aussie. But is it positive to get it back up over here? No, I don't think it is, because I don't think that, and I say this all the time, that Aussie data is good, but it's the tail that gets wagged from the US. And if we see the US breaking out, denoted by the DXY breaking out, even though Aussie's not part of the DXY, if the broad sentiment towards the market is to buy US dollars, Aussie having a slightly hot CPI and maybe they're going to hike in June 2026 is not going to cut it. And it's going to get whacked. And this is where the line is. The big line is down here, 64.21. We can see that the market looked at it, reacted, second effort, come down here, you break through, you retest, boom, you're on your way, come down here, looking down to 62. That's my sort of trade, my idea for it all. So big one once you get underneath 64. I took profit on pretty much all my Aussie. I still have, I think, one runner from up in sort of up over here in 65 again. Flexing that hold muscle. I've got a separate account just for these sort of swing trades that I'm trying to sort of do. And it's very tough not to bank these things. Anyway, I know, first world problems. But regardless of it all, a couple of things to take away from this. It is on the bottom side of this large structure. This is the triangle that we've been working off for a long time. Broke down, back test here. This thing is really looking like it's ready to come down. If you get a low CPI, I think that's going to be good night for the Aussie. And this is the thing to be aware of. Look, there's going to be a reaction at this level down here. We've got a bit of support coming through here. Obviously, this big spike low back in June. So if it comes down 63.20s, 63.70s are going to get a reaction. But again, second effort going through there, look to the next level, 63.20s, so on and so on, moving down there. But the fact that we've had this sort of if you look at this abroad, it's kind of rolling over. And it's kind of starting to crack and break at the moment. Underneath 64.20, I think that's it. Good night. We're going much deeper. So, yeah, I'm not looking to buy Aussie at any stage at the moment. Flip along quickly. We got, right shoulder came down, tested the neckline pretty much. No break yet, nothing out there. I do think metals are coming down. Not really overly interested in copper, to be honest. It used to use it as a strong sort of correlation with the Aussie, but it just has not really given us anything that's been usable. And some of these sell downs, I mean, this move, even this thing here, like that's account blowing kind of stuff, and I'm just not interested in that for the time being anyway. Plus, it's not really sort of denoting anything with the Aussie, so meh. And finally, the yuan, and this one's still grinding along, doing its thing. There's nothing new to say about this. It's just sideways. Each day they come out with their fixings. Have a look for those. 708 seems to be the low level of what they do with their fixing, because the yuan can only move 2% in a session, which is a big move. 2% is a big move. But it does mean that if the anchor point is lower, then in theory that brings the upper end lower, which means that the general consensus is moving down still. That's how to use the fixing each day. Comes out, I don't know, about 11 o'clock or something. It's always a prediction. It's funny, it's always a prediction, and then it's just miles off. This must be the same people that do the jobs numbers for the RBA. And finally, just before I finish up, because this has been quite a long one here, we've got almost 60 minutes and that. This is the gold-silver ratio. And this one got its breakout. So this has been a bit of a tussle down here. Got its breakout. We're actually in backtest. If you have a look at this on the 4-hour, we're in backtest mode. Higher high through here. Bang. We're off to the races. This is another thing that you take in and you add this into the equation. Metals weakening. Higher high after breakout. Above 60, dyslexia. Above 82.98. Call it 83 just because it's easier to remember. Above 83, yeah, you got a little bit of a resistance here. Look, that may sort of knock things back here a little bit, but more or less, channel, break, away you go. Targets are going to be, as I said, 83.80, 85.80. Above 85.80, we're moving up to 91. That's how it's going to work if you get above here. So major breakout is above 86, which was that big price target that we fucking nailed last time. Sorry, I don't normally swear on these things, but I did absolutely nail that price target coming from this channel break here. And this is what I'm talking about. There's the break, there's the back test, there's your higher high. And what does it do? It explodes higher. It had a horizontal resistance in front of it. It didn't really think too much about it. It went straight through it. It could be still the same here as well. Channel, break, back test, higher high. probably won't think about it too much, be targeting 85.80. Above 85.80 is most likely the thing's going to open up to 91, and this is what's going to get silver to 39.50. It's what's going to get gold into the 3700s. If this happens, like again, I'm not pricing these things. I'm just saying if these things, if you correlate all these charts and bits of data and all this kind of stuff together, if we see like the scenario in which this happens is the Fed holds rates, the dollar strengthens, gold and silver sell off. That's kind of the course of action. Obviously, it's not as simplistic as that, but that's a pretty simplified version. So that's the general sort of fundamental backing of it. Here we've got the technical backing of it. You break above these levels over here. You use the double bottom on the daily, double bottom off, 14-year support. That takes you back up over here. So look, if this thing does come up above this level here, then yeah, I think we're definitely, we're going to see metals get absolutely crushed. So yeah, it's a bit of an argument for that there. One thing that was positive with it in the sense of this breakout is this big candle here. So I put a post up on X at the time and I said, look, you know what? It's closed on the outside. I want to see a big candle to show that this is what the market's looking at. Because the thing is, you can have a channel like this, right? And I've said this a couple of times. I've learned the hard way. But you could have a big channel. You could have a channel. But if it comes out and just dribbles out the side, most likely it's just going to fall because the market's not looking to that. But what they were looking to was these horizontals, and this channel moves out here, bang, moves up to the top side there. So I think certainly if we take out 83, I wouldn't want to be long metals, put it that way. All right, that's it from me.